We will have our AI do all the walking and working and talking for us, up to a point, right? Because of agentic AI. And we need smart contracts because these agentic AI, our AI agents or assistants are going to be interacting with sites, maybe like CoinDesk, that, where we'll need to pay some money for something, one thing or another. And these are going to be automated smart contracts. Well, agentic AI is going to make that happen. So this is the convergence of AI and blockchain technology. But before that, what we're also seeing is a revolution in financial services. Thanks to the green light from regulators, more financial services companies are moving into the blockchain world.
In every era of technological change, there comes a moment when two seemingly separate breakthroughs collide. And in that collision, entire industries are transformed. We are standing at the edge of one of those moments right now. Artificial intelligence is no longer just a passive tool responding to human input. It is evolving into agentic AI, autonomous systems capable of carrying out tasks, making decisions, and transacting on our behalf. At the same time, blockchain technology is maturing into the foundational infrastructure for secure, automated, and cost-efficient digital interactions. The convergence of these two forces is not a distant speculation. It is beginning to happen today. At the forefront of this vision is Cathie Wood, the founder and CEO of ARK Invest, whose research focuses on the most disruptive and transformative technologies of our time. In her conversation with CoinDesk, Wood lays out how agentic AI will integrate with blockchain through smart contracts to create a seamless, automated economy, one where AI agents negotiate, purchase, and settle transactions in real time, securely, and without intermediaries. For the cryptocurrency and digital asset space, this is more than just a new use case. It is the groundwork for a new economic model. Wood's thesis isn't just about AI making life more efficient. It's about AI and blockchain together, reshaping the architecture of finance, commerce, and even the internet itself. But she doesn't stop there. Wood also shares her outlook on the U.S. economy, predicting that the rolling recession caused by aggressive rate hikes is ending, and that inflation could fall much faster than expected in the months ahead. She explains how groundbreaking technologies, robotics, energy storage, multi-sequencing in life sciences, blockchain, and most notably AI, are set to drive productivity while unleashing powerful deflationary forces. She also lays out why Ethereum is positioned to become the institutional protocol for the decentralized economy, and why her conviction in Bitcoin's potential remains unshaken, with a bold projection that it could trade well over $1 million within the next 5 years. In this video, we walk through Wood's insights step by step, from her macroeconomic forecasts to her vision for AI blockchain integration, Ethereum's strategic position, and Bitcoin's explosive long-term potential. Stay tuned as we unpack what she sees on the horizon and why she believes the next phase of technological and financial innovation could move far faster than most expect. If you find this analysis valuable, make sure to like, subscribe, and turn on notifications so you don't miss important insights from experts. Crypto markets are moving again. Bitcoin's gaining momentum, altcoins are picking up, and a new bull cycle is quietly unfolding. If you're in Canada and you're looking for a reliable platform to get positioned, Kraken is the one I recommend. Kraken's been around since 2011. It's one of the most established names in crypto globally, and in Canada, it's fully optimized for local users. You can fund your account with Interact e-Transfer, credit or debit card, wire transfer, or even at a Canada Post branch, and you can start trading within minutes. The platform supports over 175 cryptocurrencies, providing access to major assets such as Bitcoin, Ethereum, and Solana, as well as smaller cap projects with significant upside potential. For people who are active in the space, Kraken also offers margin trading and a pro interface with tight spreads and deep liquidity. One of the standout features is staking. You can earn weekly rewards directly to your account, up to 12% APR, depending on the asset. Whether it's Ethereum, Polkadot, Cardano, or newer names like Bitensor TAO and Celestia, you can put your assets to work while holding long-term. Security and support also matter, especially in this industry. Kraken is fully compliant in Canada specifically and known for its strong security track record. If you ever need help, their support is available 24/7 by chat, email, or phone. It's simple, but it makes a big difference. If you're serious about building a position in crypto ahead of the next big move, Kraken Canada is a solid option. It's secure, fast to set up, and built to handle both beginners and more experienced traders. Please check out the links below to get started.
We have been saying for quite some time that the economy has been in a rolling recession. When the Fed jacked rates up 22-fold in little more than a year's time, one sector after another began to give way, starting with housing. Housing, by many measures, is down 35% still from the peak. And we're seeing some metrics take another step function down. So I think that has some people concerned. I think the housing inflation numbers are going to come down. They're already, the monthly numbers that we get from various sources are showing declines. Year over year, they're not declining, except for maybe median existing home sales. But we do think that one of the solutions to the affordability crisis, if sellers really want their homes to move, they're going to cut their prices. And because that is if interest rates don't come down. And if they do cut prices, then the big surprise in the latter part of this year is how low inflation is going to go. And there's a big lag between the time home prices fall and they get into the statistics and leave the statistics as well. So this is going to be with us for quite some time. So I think we've been saying we believe that thanks to certainty now, more certainty about tariffs, tax policy, government spending, and regulation or deregulation, that we're getting ready to move from this rolling recession into a much stronger than expected recovery. In the next, I'll say 6 to 9 months, it will become obvious. With productivity, one of the biggest surprises, it's already strong given the slow growth rates in the economy. I think year over year, it's still up above 2%. But we think it's going much higher thanks to all of the technologies around which we have centered our research. So robotics, energy storage, AI, very importantly, blockchain technology, obviously important here, and what we call multi-omic sequencing in the life science space. All of those innovations are incredibly deflationary. And the best example probably is AI. AI training costs are dropping 75% per year. AI inference costs, so the cost to get an answer for as we're typing into ChatGPT or Grok, my preferred right now is Grok, those costs are dropping anywhere from 85 to, in China, we've gotten a statistic, 98% per year. So when you cut the cost of something, you get a lot more of it. So we think this is good deflation. This is not deflation like 08, 09. That was very bad deflation. This is good deflation for those companies that are on the forefront of these new technologies. It might be bad deflation for companies that are going to be disrupted. And if they're being disrupted, they'll be forced into cutting prices as well. So we think we're going into a much more deflationary world than I think many economists and strategists would suggest.
Talk to me about that 6 to 9 month outlook. Where does crypto fall into your vision for a stronger next 6 to 9 months?
The regulatory environment is very important here. We've gone from a hostile regulatory regime under Gensler at the SEC to a very, very friendly regime now with legislation guiding regulators instead of regulation through enforcement, which was which was forcing innovation off US shores to other countries. Now that's changing aggressively, especially appointing David Sachs, the czar for both crypto and AI. And this concept of agentic AI coming into view, where we will have our AI do all the walking and working and talking for us, up to a point, right? Because of agentic AI. And we need smart contracts because these agentic AI, our AI agents or assistants are going to be interacting with sites, maybe like CoinDesk, that, where we'll need to pay some money for something, one thing or another. And these are going to be automated smart contracts. Well, agentic AI is going to make that happen. So this is the convergence of AI and blockchain technology. But before that, what we're also seeing is a revolution in financial services. Thanks to the green light from regulators, more financial services companies are moving into the blockchain world because they realize it's much lower costs. So as I explain to our clients what's going on here, I like to back up because I remember this time very well. In the early 90s, late 80s, early 90s, when developers were first working on the internet, there was no idea that financial services or commerce would take place on the internet. And therefore, there was no payments layer. Now, thanks to blockchain technology, we have the payments layer. Over the last 30, 40 years, because we didn't have the payments layer, we needed to, and because financial services and commerce did migrate onto the internet in a very big way, the traditional world had to mitigate the risk of putting credit cards online and, trying to use traditional financial tools in this internet world. And all of the intermediaries involved have been taking anywhere from 2 to 3.5% out of each transaction, paid for mitigating the risk. We can probably drop that, and that's a tax on the system, right? We can drop that tax from 3.5%. These are US numbers. In Nigeria, the numbers would be 20% or more, right? Drop that tax from 3.5% to maybe 1%. And, the financial services world is huge. We think it's going to be a $250 trillion assets under management world in 5 years. So if you're talking about those kinds of numbers, taking 2 to 2.5% out of, or lowering the tax by 2 to 2.5%, will lower the friction in the market and increase the efficiency.
Cathie's economic outlook sets the stage for a very different investment environment than the one we've seen over the past 2 years. If inflation really does break lower while productivity accelerates, capital will naturally flow toward the sectors driving that growth. Sectors powered by innovation, not just cyclical rebounds. And for Wood, that means technologies like AI, blockchain, and energy storage aren't just long-term bets. They are the engines of the next expansion. Lower costs, higher efficiency, and a friendlier regulatory climate create conditions where disruptive ideas can finally scale without being forced overseas. This is where her focus shifts toward crypto's foundational layers. If AI agents are going to transact, negotiate, and settle autonomously, they'll need a secure and reliable settlement environment. And in Wood's view, Ethereum is emerging as the leading institutional choice. Recent moves by major platforms like Coinbase and Robinhood to build on Ethereum's Layer 2 ecosystem reinforce that belief, and she explains why the network's decentralization and security may give it the edge in institutional adoption, even if other chains outperform on speed or cost.
Do you see Ethereum as being the foundational layer to enabling a productive agentic AI world?
Yes, we have been watching carefully who is signing on to what protocol as they begin to develop their digital asset strategies. So, well, first we saw Coinbase for its layer 2 base chose Ethereum. More recently, we saw Robinhood for the layer 2 that it is evolving, also building on top of Ethereum. We had a thesis that Ethereum was going to be the institutional protocol. I know that Solana was doing much better. Solana had a massive run relative to Ether. And so many people were challenging that notion, and yet we're seeing the votes being placed. And it makes sense. Ethereum, while it might be higher cost and a little slower, it's more decentralized and therefore more secure. Solana, we think, is probably going to be the winner in more consumer-facing applications. And it was very, very difficult for us to gain a position in our ETFs with good exposure to Ether. There are all kinds of problems when 40 Act funds buy another fund, another ETF to gain exposure. There are tax issues. There are fees upon fee issues. There's something called, and this is a tax issue, bad income. If the profits associated with something generating bad income, bad doesn't mean evil at all. It just means it's a tax term. If those profits, gross profits, this is gross, there's no netting here. If those gross profits are more than 10% of the total profits generated in a year of a fund, the entire fund can be shut down. The tax benefit, you'll basically you'll lose a lot of tax benefits, and you'll be subjecting the fund to a great number of fines, if not actual shutting down. So we can't take those risks. And as you can tell, I'm not deep into tax law, and I'm not going to be able to explain exactly who, what, when, where, why, and how. I just listened to our trading team, our compliance team, our finance team, and I say, okay, I can't go there. It's just, I can't do it. So this is the first time we've been able to gain a solid position in Ether. And, sure, it comes at a premium, but what's different from Bitcoin treasuries, like MicroStrategy, now Strategy, is there's just more utility that these Ether treasuries can offer, staking being one of the most important ones. The ETFs, at least not yet, do not, the Ether ETFs are not allowed to stake. Mm-hmm. So, and yes, I think we were the cornerstone investor in Circle. So we've been watching the stablecoin movement, which is exploding. And of course, again, most of that is happening on Ethereum. So when people ask me, what is the biggest surprise in the last 10 years? So we started ARC in 2014. We wrote our first Bitcoin blog back then. 2015, we wrote our first white paper on Bitcoin. And we thought that Bitcoin in emerging markets would serve the role that stablecoins now are serving. And Tether is just an unbelievable story that way. I just learned from one of the founders of Tether, Paolo, that they had no idea that Tether would become an important source of dollar exposure to emerging markets until COVID, when the children of in families in emerging markets would go to their parents and say, you don't have to go into the black market today to buy dollars. We can do this on the internet. And that's how it really spread, which is fascinating, isn't it? We thought Bitcoin would serve that role because we didn't know about stablecoins. And even very recently, I think we're becoming very surprised at how quickly the uptake of stablecoins is. So if we had to modify anything in that $1.5 million forecast, you'd probably see and you can see on a table in Big Ideas 2025 how we build up the bull case. We'd probably take a little bit from the emerging market part of that stack, but I think the much bigger force right now is it's the gateway into digital assets for institutional. It's a new asset class that and the really substitute for gold as a store of value. Another use case. Those are the two biggest, and those we have not changed at all our opinion on. So I think we can safely say that our bull case is well over $1 million in 5 years.
When asked about her favorite crypto projects, Cathie Wood doesn't mince words. Bitcoin and Ether are at the top of the list, and she notes that Solana also held a significant position in ARK's private funds until Ether began to outpace it. For Wood, these big three cryptocurrencies are more than speculative bets. They represent the foundational infrastructure for decentralized finance, digital assets, and the future of institutional adoption. Interestingly, this perspective aligns with, but also complements, what Real Vision founder Raoul sees in the market. In a recent tweet, Pal writes, "Sometimes we overcomplicate things. This trend since the test of the low in 2024 has been one of the easiest this cycle. SUI? Plus 760% since the start of the banana zone in August 2024. And it still amazes me how few people really own it. Higher, much higher." While Wood is focused on Ethereum, Bitcoin, and Solana as the institutional pillars, Pal highlights the explosive growth potential of emerging digital assets like SUI, illustrating how different layers of the crypto ecosystem can offer both stability and outsized upside. Together, their views underscore a critical point. The crypto landscape is multidimensional, with Bitcoin and Ethereum serving as core infrastructure, while newer tokens and Layer 2 solutions drive innovation and opportunity. This dual perspective offers a roadmap for investors navigating digital assets. By understanding where the technology is going and which projects are leading the way, investors can position themselves to benefit not just from market cycles, but from the structural growth of the entire crypto economy. From agentic AI integrating with blockchain, to the adoption of stablecoins in emerging markets, to Layer 1 and Layer 2 networks driving institutional adoption, the next wave of innovation is broad, powerful, and accelerating. If you found this analysis valuable, make sure to like, subscribe, and turn on notifications so you never miss expert insights on the technologies and cryptocurrencies shaping the future. Your engagement helps us continue delivering deep, data-driven breakdowns and ensures you're ahead of the curve as digital assets evolve. Thanks for watching.